This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Pachurdiz. Thanks for joining us at xm.com. It's all about the US inflation report today, as the January figures due at 13:30 GMT will either endorse the view that disinflation is taking hold or point to a long battle ahead to contain price pressures. After the recent remarks on disinflation from Fed Chair Powell and the run of softer-than-expected CPI releases, it's easy for the markets to pin their hopes on the former. But there's a danger that the January prints will go the opposite way, as it will be the first to use a different methodology for calculating the consumer price index. Hence, the risk that the forecasts end up being way off the mark is quite high. Analysts are predicting that the headline CPI rate will continue its downward decline to fall from 6.5% to 6.2% year over year. Despite some jitters last week, equity markets seem confident about the forecasts, staging a rebound on Monday. All three of Wall Street's indices rallied more than 1%. The surge in Treasury yields took a breather on Monday, and the 10-year yield is slipping further today. This could just be a combination of caution in the run-up to the CPI report and a technical correction. The 10-year Japanese government bond yield bucked the trend on Tuesday to press higher, albeit to be capped by the Bank of Japan's upper yield target of 0.50%. The yield target is under renewed pressure following the Japanese government's decision to appoint Kazuo Ueda as the Bank of Japan's next chief. The speculation of a policy shift has helped the yen recover from multi-decade lows versus the US dollar, although its gains today are very modest. The pound was also firmer on Tuesday, as its one-week-old rebound was bolstered by strong jobs data. In commodities, gold is attempting to recover from one-month lows. The precious metal has not benefited much from the recent headlines of surveillance balloons flying over US airspace. On the other hand, reports that US Secretary of State Antony Blinken could hold talks with Chinese officials later this week suggests the situation is unlikely to escalate. Nevertheless, gold prices are probably taking their cues from the moves in yields and the dollar in heading higher today. This was today's Daily Market Comment. Thanks for joining us at xm.com.